And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, everybody. It's time for the market forecast. Lacey wanted to come up and say good morning to everybody. Welcome. My name is John Hoagland. It is Wednesday, the 17th of August. This is the market forecast. Thanks for trusting me with your time. It was nice to get a little shot of Lacey in there this morning. She was jumping up on me before the forecast today, so I got a chance to say hello to everybody from Lacey. As always, we're not only saying good morning to Lacey, we are focusing on accurate context, good risk management, and always thinking about patience. Retail numbers this morning. 7:30, the retail sales came out. Now you can kind of interpret these numbers many different ways. It seems like the news environment is kind of looking at these as negatives. Both the core and retail sales, the last numbers were revised lower, so there's that. And retail sales, they were expecting 0.1%, came out 0%, and the core, which is without autos, they were looking for 0.1%, and it came out positive 0.4%. So maybe some good, maybe some bad in those numbers. We're still waiting for business inventories at 9 o'clock, and of course the 9:30 EIA petroleum status report due out. Last week, there was a 5 million barrel boost, 5.4 million barrel boost. Today, they're looking for a negative 275,000. Not a very big draw, but a draw nonetheless. And then, of course, 1 o'clock, we have the FOMC minutes. That is, of course, the same time as the group coaching session starts. So I'll start the group coaching session today at 1:05, so everybody can get a chance to take a look at what those FOMC minutes, what they hold. Initially, the equities took a kind of a knee jerk to the downside. We are ready to open these markets lower today as retail sales has come out, and after the UK CPI came out and has inflation up over 10% in the UK. Retail earnings have stumbled a little bit this morning with a pretty big miss by Target, Lowe's with some mixed information, and crude prices have held steady after the API last night showed a minus 448,000 barrel draw, and again the EIA expecting a 275,000 barrel draw in crude. Not big numbers for crude oil. So as always, we've got one Fed member that's scheduled to speak today at 8:30. We have Michelle Bowman, also Michelle Bowman at 1:20 this afternoon. And of course, I'm quoting all these times in Central Time. So as always, if you like what you see and this is helpful to you, and you find these forecasts and recaps good and nice and everything, hit the lucky like button and tell everybody. As always, you can share, comment, question, feedback, and heckle at will. We also do appreciate a lot of love here on the forecast and recap. Subscribe to our YouTube channel so you get notified when we do go live. The VIX this morning, last I checked, was up about 4%, but still hanging right around that 20 level at 2050. The dollar index continues to leak higher over time here, 106.74, and the yield on the 10-year also leaking higher, up at 2.89% last I checked this morning. Got to check in with everybody. Good morning, Orion. First one in the room, you win the prize. Jeff Mullins, Theo, Darlow, Brody, Charles, Serenity Trader, Tachyon, my brother Rick, love you. JD, good to see you this morning. Master Roy, Grim Reaper. Jim, just curious, when you were 16, did you ever think that this was going to be your profession, and how did you get into the business? By luck? A quick rundown is fine. When I was 16, the only thing I was interested in was art, skateboarding, and girls. I went to art school and decided at some point that I did not want to starve for my art. My father was on the floor of the Chicago Board of Trade for 40, 50 years. So it seemed like it was a kind of a natural. My brother Rick, who was in the room this morning, was working on the floor of the Chicago Mercantile Exchange and just suggested that I go down, just get a job as a runner and see what I think of it. And it didn't take too long for the bug to get into me to get into the futures industry. So I started as a runner, worked my way up through the trading floor, got a job as a proprietary trader, traded for a while, I was a filling broker for a long time as well as trading, and the rest is history. It seemed as though it wasn't by luck, really. I had family in the business, and sometimes that's really what it took to get that job on the trading floor. So I thank my brother Rick for bringing me down to the trading floor, getting my first job as a runner at a company called Statler. If you don't know, it's Statler. And the rest is history. Just worked my way up, and here we are. Thanks for asking, Grim Reaper Trader. Scott saw and he conquered. Shaw Cunningham, good morning. Ron, DA, Grim Reaper Trader. Nasdaq still at a premium pricing. Terrence, Robert, Glitter Sandwich, Jeremy, Dimitar, Bill, Anissa, Marcelo, Jules, Pete, Unicus. The quote for the day: time is your friend, impulse is your enemy. My goodness, truer words I don't think have ever been spoken. Impulse usually is something that happens to me when I'm feeling emotional or I'm feeling angry, and impulse is usually also fear-based, so we don't really think much about impulse before we react. And in this environment, I find it's much more important to be cognitive about everything we do. So yesterday I was suggesting, before you even take a trade, say out loud, is this in my best interest? And I find that just by saying those 6 little words, it takes about 1 second to say it, I can decide if what I'm about to do is an impulse or if it was a planned and in-process / strategy decision. Joe, good morning. The Rooster, Sarah, good morning. Flowers and prayers and love to you as well, Sarah Hall. Tachyon, birthday today. Nice. Happy birthday, Tachyon. I'm going to say that I'm going to do everything in my power to make sure you have a good day, which isn't saying much. Zerain, good morning. Juan, I have a doubt. What are the limit up, limit down percentages for CL in order to calculate 2% out of those numbers and not break that rule? Thanks. Juan, I'd have to research because they do change from time to time. And, right today, I don't think we're really at risk of that. We don't really have much movement. Let's see right now. Crude oil is 0.9% lower. I'd have to go ahead and check the CME website in order to find the numbers for that, because again, they do change as volatility increases or decreases. They change those numbers, and it's a kind of a dynamic number too. So it's kind of hard to keep a hold on or a handle on. I would say, just to be safe, Juan, if we're more than, like, before the open 5%, after the open getting close to 7%, I would stop trading. And when we start to get that kind of volatility in any market, I even question, as somebody who's been around for a while, whether I should even be involved with that kind of volatility. It seems like there's a lot of big opportunity, and it's true, there is a lot of big opportunity, but the risks are also far greater with that kind of volatility. Sorry, I'm not able to give you a solid answer, but those dynamic limits are hard to keep a handle on. Cavs and Cubs, go Rick. Chris Johnson. It's always the older brother that leads you down the dark path. Yes, he's driven me. He's taken me down a few dark paths, but I think I've also done the favor for him a couple of times. William, hello. David, Sarah, all happy birthday, Tachyon. Is this in my best interest? Saved me yesterday afternoon. Jules, that makes watching the market forecast all the more worth it, right? Anissa, it's saying happy birthday to Tachyon, Juan, and Tachyon saying thanks to everyone. Yes, happy birthday, Tachyon. August 17th. August 17th. Whoops. Let's see. It's Donnie Wahlberg's birthday. Belinda Carlisle's birthday. Sib, the drummer from Boston, it's his birthday. So you're in some good company there, Tachyon. I'm sure there's a lot more. Patrick, good to be here. Good to see you. Noticed nobody posted a joke for yesterday, so what do you call a pony with a sore throat? Serenity Trader, I can't wait to hear the punchline for this. We got a dad joke, it sounds like, here. One sick pony? Is that it? Did I get it? I guess we'll have to wait. Let's jump into the charts. Let's take a look at the S&Ps. Horse. A little horse. There you go. Nice. Nice. I thought mine was pretty good too, but that's just me. All right, the S&Ps. A little horse. Okay. Well, yesterday we had our look above weekly kickoff high. It was some decent opportunities to the short side before we broke out and failed above yesterday's upside. Even with this pullback we're currently in, upside structure remains intact. We had an open interest increase slowing yesterday. We only added 1,500 in open interest. So the open interest increasing has been slowing. We talked yesterday about a little bit about the fact that the upside auction may be ready to take a little bit of a rest, and it certainly seems that might be the case for us today. The overnight, 43.15 even. I recognize that from, that's right, it's the weekly kickoff high. So a bullseye in the overnight for the weekly kickoff high, which makes me a little bummed out that I wasn't there to take that trade. I don't like to trade in the overnight session, so I'm going to have to find opportunities today. The inflation snake has reared its ugly head again in the world, and mostly now in the UK with their CPI numbers this morning. Take a look at the 30-minute chart here. All right, so just stair-stepping higher. Here's our excursion and failure above 43.15. There's our overnight high right at it. We've got overnight shorts here. The knee-jerk after the retail numbers was to the downside. It took us basically right to the 200-session moving average on the 30-minute chart. Mom's watching. And she typed something in the chat. Mom, Janet, I love you too. Nice to see you chiming in. Now I'm all warm. Mom's here. Ah, awesome. Now I've completely lost my train of thought, but that's okay. Okay, overnight inventory, short, very short. Looks like we're going to be opening with a gap, which instills gap rules. Gap rules are if we open with a gap, that's a open outside of the previous day's regular trading hour range, that establishes the gap. If we can't close the gap relatively early, I understand that's a subjective term, we're going to be looking for opportunities for the market to offer more short opportunities, more short, in other words, to the sell side. When we can't close the gap relatively early, we look for opportunities to trade in the direction of the gap, which would have us looking for shorts. Retail sales was really not a lot of help with a pullback off of the lows here. We're still waiting for the regular trading hour session to open up. That may change things a little bit. The visual target that I have down below for this is this naked point of control, 4230 naked volume point of control is the visual that I see this market really kind of focusing on. If we're looking for continuation to the downside, traders will be focused on this level. If traders are focused on this level, they have a tendency to make the market go in that direction. Does that change our overall upside structure? 4320 today. I'm sorry, 4230 today. It does not. It takes us down to about right here. So we can come all the way down there and not break our upside structure according to the things that I'm looking at. So the opening is going to be relatively important. We're opening out of range, out from yesterday, and out of balance overall. The opening range trade may be something we'd want to think about taking a look at. Again, the market traded right down to this 200 session moving average on the 30-minute chart. And we'll have to see how the market opens up and how the longer time frame traders treat this. The longer time frame traders are well aware that we've got a whole bunch of shorter time frame, weaker hands shorts in this market. And the market really kind of this is kind of where we're looking at the base of the late spike that happened last week. Let's see, last Friday. We opened, drove to it, and then accepted, and then continued higher. This is where I think the Nasdaq found some support yesterday. So it's going to be an interesting trading day, as if they aren't always. The gap rules are really the kind of first nuance that I'll be focusing on, and I'll be watching that opening range trade for a potential early opportunity. Here's crude oil. Finding at least for the time being some possible acceptance down below that weekly kickoff level of 87. Where is it? 87.5. There was a previous level and a new level for us. I'm still on September. Tomorrow, I will 100% be trading the October crude if I'm going to trade it at all. The volume this morning was still pretty much better in the September, and the dome looked a little bit thicker in the September contract. So I'm still on September. Tomorrow will be in October. We are in the teeth of rollover. Volume and open interest on these couple of days are too blurry to really make any kind of an assessment of how the auction process is doing because of rollover. So I'm really kind of focusing on that 87.50 as a pivotal level for us today. We are well below that now. Overnight settlement was 86.53. We really haven't accumulated anything as far as overnight inventory is concerned. We took a look above our 87.50 level. We did not find opportunity above there. So I'm looking at this level here as kind of pivotal. Short below, long above. As a caveat to that, Sometimes these weekly kickoff levels become magnets until the longer time frame traders make some sort of decision as to direction if they're going to become directional. We know that we're in rollover. The likelihood of the longer time frame traders becoming directional today is slim without something changing. EIA at 9:30 could certainly bring that kind of change. Be patient today. We're in range. We're in value. We have no overnight inventory, no gaps, no runs, no hits, no errors, nobody left on base. We're hanging out, and I'm not doing anything until there's a change here. Our overnight low and overnight high might offer some opportunity. Now, there's a question as to what's the opening range trade and how do we trade it? This is a 1 minute chart, Swede. This is the first minute. Okay, to me, that's the opening range. There are other traders that look at the opening range as 30 seconds or even as long as 5 minutes. But when we open and we leave the opening range, once that first minute is established, I can put a stop down below to get short if the market looks below the opening range. I can put a stop in to get long above the opening range if the market looks above the opening range first. Now, right now, the opening range short is paying us. Is it paying us a lot? Well, I don't really like to take trades at 1-to-1 reward over risk. So, and the fact that we've opened where we opened right here says there's no real reason to rush into anything here this morning. So the opening range trade is not something I was considering taking in crude oil this morning. I don't think that there's enough gumption. I don't think there's enough fortitude. I don't think there's enough volume. I don't think there's enough interest in this market to create a big enough opportunity outside the opening range. And we're looking at a 24-34 tick opening range, which is one of the smaller ones we've seen. The opening range, I look at it as 2 minutes. 1 minute, Rue Della. There are those that look at it as 30 seconds. There are those that look at it as 5 minutes. The opening range was something in the trading pits. When the market opened, all the brokers that had orders that were due fills right on the open had to execute them immediately. If there were a lot of orders, sometimes the opening range would be a very wide price range and take 4 minutes to establish. So a lot of it has to do with how much business there is to get done right on the opening. Opening range, what is the opening range 2 minutes and meant for today? To me, the opening range is always 1 minute. No matter how much business there is to be done on the open, clicking the mouse is, I think, it makes the opening range a lot faster. Okay? So again, in crude oil, I am really not interested in doing anything probably before the EIA Petroleum Status Report comes out at 9:30. That's the S&Ps. We've been there. Here's the Nasdaq. So the Nasdaq lost open interest yesterday. That's something we haven't seen for a little while on an attempted up day. I don't know how well it did on an attempted up day, and we've been talking about this auction to the upside needing a little bit of a break. Whether that break is a pullback or a consolidation is yet to be known. The upside structure remains intact. If we get to 13, well, we don't have that same naked point of control down here. So my focus is more on this 20% off the all-time high down here at 13,414. Okay, the naked point of control down below takes us to a potential structure break. The next naked point of control below, which is a weakness in structure, is 13,182. So that takes us all the way down here, which could provide a potential market state break to the downside. I don't see that happening unless something goofy happens. Nobody knows for sure when or if anything is going to happen. So we're going to go and we're going to take a look at the 30-minute chart here. Okay, it looks like I failed to put settlement on here, which is highly unusual, but settlement is 13,658 quarter, 13,658 quarter. And that's going to be close enough for rock and roll. Just so we can see the market opened here. We're holding overnight shorts. Now, a little bit of a difference. The S&P and the Nasdaq are very similar, but different. There's much less of a likelihood of the Nasdaq opening with a gap than there is in the S&Ps. This could be important information. We were talking about where the late spike started in the S&Ps. Look where the low was put in yesterday in the Nasdaq at the start of the late spike from last Friday. Look where it traded down to today, basically at the spike of at the base of the late spike created on Friday. Still looks as though buyers are protecting this area down here. 13,475. That's probably a TPO point of control that you're looking at. Just on these charts, I'm just kind of looking at the TPO, the volume points of control. So yes, I would agree that is a naked point of control from the 12th. Yep. So yeah, this is TPO point of control. We get really complicated sometimes. Here's that volume point of control that was already checked. So yeah, this is a really an important level that Hagel Matters is pointing out to us. So this is a naked TPO point of control down here, which easily could be targeted. Thank you for pointing that out, Hagel Matters. I just try and focus on what we're seeing on these volume profile charts, and you're right to point that out. So I thank you. That was 475, right about here. Takes us a little bit down below our late spike, but that's all right. So we're kind of holding here. And that next naked volume point of control is all the way down here in this gap, which is also a structural weakness. This is the naked point of control I'm looking at. We didn't get to it in regular trading hours. And that gap still remains down there. And for gold, Mike, not to be confused with the pot. No, we don't want to confuse that with anything. All right. Downside drift has lost a little bit of its volume and open interest, it seems. We lost about 1,600 yesterday on lower volume and a lower attempted move to the downside. It's starting to feel as though maybe this market is getting a little cheap in this current environment, where we're going to be looking for a possible test of 1775 weekly kickoff low. We got down to 1779. And remember, everything is a zone. So if you're looking for finite opportunities at those levels, you may get the market may go through it a little bit and may stop short of it a little bit. Always a little bit of a challenge for us to try. I've been trying to take this market off the back burner for a little while. And I'm kind of keeping it on the back burner. I'm not seeing that there's a lot of really good readable opportunity here. My only hypothesis today is to get the market to take that look down to 1775 and then look for what happens there, if only because it allows me to limit my risk. Here's the 30-minute chart. Hello, George. So there's our kickoff low. Settlement is here. We had some overnight inventory to the short side. Since the 7:30 bar here, we've had the opportunity to kind of reconcile some of that. I don't think that there's really a lot of overnight inventory with which to deal with here. So we've closed the gap. If we accept inside the gap, accept inside value, price could easily move back to value high from yesterday, which is 1792. But is it really worth the risk to try and get that little bit of value area special situation play from yesterday? That's why I'm kind of keeping this market on the back burner. We've got VWAP here providing a little bit of resistance early in the session. Market seemingly rejecting the range from yesterday. As long as we don't put in a new regular trading hour session high here, I think there's decent opportunity for us to look for a short here. If we can't do that, then I'll just back off and look for another opportunity. But again, I'm not really focusing on gold because it's kind of still on the back burner for me. The euro, bit of a dead cat bounce here, don't we see that? Off this big move to the downside yesterday, testing the weekly kickoff low. We've got an inside extended trading hour range today. The market really just kind of focusing on what's going to happen next. And it seems like there's still some eyes on this market because we did add 4,600 in estimated open interest yesterday. Dead cat bounce. What's it look like? Well, we got the big push down, bang, bounce. No real move, no real reaction. Tested the weekly kickoff low. I didn't really retest this naked point of control during regular trading hours, so that remains a visual as well as our overnight, as well as our weekly kickoff low. No real overnight inventory here in the overnight session. I was kind of focusing, I believe, on overnight low and overnight high for early opportunities today. We did get a look down below the overnight low in regular trading hours here. That has, at least provided at least a 2-to-1 reward over risk. But again, I'm not really focusing on big opportunities here. If I'm going to be trading the euro, I'm going to be only taking trades that I can reasonably and probably expect at least 2-to-1 reward over risk if I bother taking the trade. All right. And we had our 10-year. I don't remember if we talked about this, but this bearish engulfing pattern was pointed out in an email to me from our friend Kevin that has really kind of turned price in the opposite direction. We do see engulfing patterns. It seems quite a bit in the 10-year. We had an engulfing pattern to the long side here, an engulfing pattern to the short side here, an engulfing pattern to the upside here, another one here. But it makes sense that this market is continuing to push lower technically off of this bearish engulfing pattern here, and another one here. So we've gotten a test relatively close to weekly kickoff low here today. We've opened with a gap. So far, we've been unable to trade to close the gap. Again, what is early in this session is, again, subjective. But if we can't get to this gap close, what doesn't happen is equally as important as what does happen. And I've got an example of that in the S&Ps from yesterday. We'll go take a look at that. So, the tint or tilt to the 10-year is to the downside. If we get the opportunity anywhere up near the gap close, there might be an opportunity to catch a few fish there. And for the natural gas, cup, handle, directional. We've been testing the previous weekly kickoff high up here at 952. But we were looking at this earlier this week as the cup, handle, and finding direction to the upside. And that hypothesis still remains true. So we're looking for opportunities to try and buy this market in periods of weakness in the short time frame. We just opened. We closed the gap to the tick almost, just enough to close the gap. This might be providing a degree of support. It at least is in the short time frame. We had some overnight longs here. Those overnight longs probably were what were brought us to the gap close. But if we can't, reaccept inside the range from yesterday, then there's only one thing left to do, and that's range up here or continue this push to the upside. We added 5,200 yesterday in open interest. The volume yesterday, pretty decent. So we're seeing volume and open interest on up days. The upside auction in the natural gas, rather unfortunately, is healthy. Here's what I was going to show you from yesterday's S&Ps. Yesterday the day before we had a double distribution trend day. Opening between the high volume nodes of a double distribution trend day tends to create the market, to give the market an opportunity to trade to both high volume nodes in both areas of distribution of time and volume. Well, yesterday we opened in between. There's our point of control in the upper distribution. Here's our high volume node in the lower distribution. We opened between them. We traded almost to the point of control in the upper distribution of time and volume, which says, okay, we've done that. Let's go check down to the high volume node in the lower distribution. However, when we drove down here and we couldn't continue to push lower, all we really did was take out the single TPOs here in market profile. And I said, I was in a meeting at that time. I said, something tells me the fact that we were unable to trade all the way down to the lower distribution here, down to the lower to the high volume node in the lower distribution, is going to be important today. And I didn't know how important it was going to be. It ended up putting in the low of the entire session. So remember, when you're when you're expecting something and it doesn't happen, it can create as much detail or good information as when it does happen. The things that don't happen are as important as the things that do. I do not believe you have to be flat for Fed for the Fed minutes. Only the FOMC statement. I'm looking at the website right now. You do not have to be flat for the FOMC minutes. Only the statement. And you never know. There may, just may, be some changes around those rules sometime coming soon. I don't know. Maybe I'm just talking. We'll find out. Anyways, have a great trading day. Looking forward to seeing you for group coaching. I'm going to put the link in here so you can register for group coaching. We had a great session on Monday. Hopefully we'll have another one. And we're getting pretty close to the open, so I'm going to take my deep breath. I'm going to stay humble, grateful, and creative today. Trade well, everybody. I'll see you in the proverbial trading pit in just a couple of minutes here. Looking forward to everybody having a great day. We are focusing on your success. So trade well today, and I will see you group coaching and the recap today. Get out there and profit today.